I want to bring up this chart, which takes a look at the fact that the year-to-date trade surplus for China this year continues to just come in so much stronger than we've seen in previous years. How encouraging is this in terms of suggesting that global demand continues to hold up? Or with these numbers, are we looking at elements of seasonality, of the fact that perhaps there's distortions because of the number of lockdowns and disruptions that we have seen?
Yeah, thanks for having me. I think the record trade surplus is telling you two things. One is that exports are pretty strong, and two is imports are not that strong. On the exports front, as you said, it provides a glimpse of global demand. And if you're worried about ex-China falling into recession, perhaps this is an encouraging print that demand is still resilient. But at the same time, the record trade surplus also benefited from weak imports. And this relates to your earlier comment that China domestic demand, whether it's a property sector, whether it's a COVID-related downward pressure, with the imports weak, that contributed to the very strong trade surplus.
In your view, it is that domestic consumption that we're worried about, right? Is it COVID zero, given that is here to stay and it is an ongoing drag? Or is it the fact that we're still seeing the property sector bubbling away, given that it is so core to so many industries, to so many jobs, but also so much to household wealth?
I think it's both. On the COVID front, certainly every time when there's a lockdown and COVID flare up, you saw consumption deteriorate the most. So certainly under this zero COVID policy, consumption is under pressure and is likely to continue to suffer whenever we have outbreaks. But the property sector is important as well. This is the single largest item on households' balance sheet. And not only is hurting jobs and economy, it also hurts sentiment. When you have a property sector that is weak, and also similar to the COVID situation, it's highly uncertain how long this weakness in the property sector is going to play out. That certainly creates uncertainty and hurts sentiment.
Yeah, no wonder we are seeing policymakers trying to really boost credit in the economy, supply more loans. But I wonder how much the uptake is. I mean, just because you have a large loan supply, does that mean that this is actually filtering through the economy?
Yeah, that's a sort of a tough question for policymakers on multiple fronts. What you said is correct. It's like pushing a string in monetary policy, even though your interbank liquidity is ample and front-end interest rate is very low. If there's no demand, it's hard to transmit that into loan growth and activity. And at the same time, there's also this policymakers themselves are not trying to stimulate everything at this moment. So I want to emphasize the property slowed down, even though the magnitude may have been too much for policymakers' liking. The direction is by design, that they did want to rein in property sector leverage. And so to some degree, you also don't want to stimulate the old economy or the property sector or having a lot of undesired leverage build up. So in this environment, transmission is blocked, but also you have certain sectors you want to help, certain sectors you don't want to help. That just makes a very challenging policy task. And that's why the government has been using a lot of structural instruments, such as a relending program, rather than just cutting interest rate, cutting RRR, doing the cross-border easing.
But if you wanted to, the Chinese policymakers could do it. How much leeway do they have, given that the inflationary outlook, at least in China, is still more benign than in other places of the world?
Yeah, China, you look around the globe, inflation is not nearly as high as in many other parts of the world. But at the same time, I would say policymakers in China are more cautious. We are getting the CPI inflation for July this week, and we're forecasting 3% headline CPI year-over-year growth. And I think that 3% is effectively a ceiling for Chinese policymakers. So they are going to be more cautious as we head into sort of three-handle CPI inflation, and that's another reason why we don't think the government will want to implement high-profile easing measures for fear of inflation and also capital outflow risks.
Where does that put the renminbi?
Yeah, on the renminbi, our view, given that the very strong trade surplus, we think medium term, there is still this fundamental driver of CNY strengthening against the dollar. In the near term, between the geopolitical tensions and also the Fed hiking pace, we are expecting kind of a neutral or 675 CNY 3-month target. But in the medium term, for example, year end, we're expecting some strengthening in the CNY. 660 is our 6-month target.
What is the end game for the property sector then? Because we have really seen this continuing to just percolate, right? This is becoming an ongoing drag, I think, particularly when it comes to a psychological point for the broader economy and for the consumer.
Yeah. I think that's a great question. I think at the end game, our understanding, if you look at 20, 30 years down the road, China simply does not need as many new property construction, new property sales per year as what we have seen over the past 10 years. So in some sense, we need to see, this is over the longer period of time, a smaller real estate sector, both in terms of the contribution to GDP, its leverage and financial market implication, and the psychological or mentality among households that everything is so tied up to the property sector. So I think over the longer term, we need a smaller footprint of the property sector.